Hello, everyone. I'm Chris Kapchis, president of Chestnut Park Real Estate, and today I'm going to give you your December 2024 market report. It's actually a little bit more than just the December market report because we've wrapped up 2024, and I'd like also to make some comments about what we're anticipating as we move into 2025. I'm going to begin this presentation by actually quoting T.S. Eliot from his poem, The Hollow Men. December, unfortunately, did not go out with a bang. It actually went out with a whimper, sadly. We did 3,359 sales. Unfortunately, that was actually less than what we did in December of 2023. And as you may recall from my report for December 2023, I actually quoted Queen Elizabeth at that time and talked about that particular year from a real estate perspective as being the Annus Horribilis. It wasn't quite Annus Horribilis in 2024, but it was not one of the most robust or exciting resale years that we've seen. In total, in 2024, we saw 67,610 properties sold. That's about a 2% increase compared to what we saw in 2023. We did 65,877 sales at that time. But those numbers need to be put into perspective. And the period between 2010 and the beginning of the pandemic, the Toronto real estate market was averaging about 90,000 sales a year. We had a couple of banner years in that in 2016, 113,000 sales were recorded. And of course, the all-time record was 2021, when 21,000 plus properties were reported sold. So the numbers that we're actually talking about are actually more reminiscent of sales that were taking place back in the 90s, particularly the late 90s. And interestingly enough, again, we have to keep in mind what was happening from a population perspective back in the 90s compared to where we are today. Back in the 90s, the GTA's population may have been somewhere around 4 million people, or over 6 million people today. So to be doing sales that are consistent with what was happening more than 2 decades ago is a clear indication of what's happened to the real estate market. There's probably a couple of reasons why December was not as robust as we would have liked it, because we were doing very well in terms of September, October, November being better months than in the previous year. And then all of a sudden we get to December, and December doesn't do as well as December of 2023. Marginally different, but still a difference nonetheless. And the two reasons that I would attribute to that is, one, the bank rate came down in December to 3.25%. Still not enough to really drive the real estate market. And then on top of that, at the federal level, the cap on insured loans was raised to 1.5 million from the previous cap of 1 million. But that didn't come into effect until December the 15th. And by that time, we were deep into the holiday season, and I think a little bit too late for people to engage in that program. I think we will see as we move into January, and there's already some indication that that is happening, that there'll be a take-up of that program because it'll allow people with less savings to be able to get into the market. That up until December the 15th prevented them from doing so. Average sale price also came down a little bit in December this year compared to December last year. Put a chart up. You can see from the chart on a year-over-year basis what's happened to a number of different categories. But in terms of the average sale price, it came in at $1,067,000. Last year it was $1,084,000. Not a huge discrepancy over the 2 months, but clearly there was a decline from last year to this year. However, overall, average sale prices have continued to stay relatively strong. If we look at the indicators going into 2025, they're all very positive. We anticipate there to be economic growth. Borrowing costs are going to be lower. As I mentioned a moment ago, the cap on insured loans has increased, and to some extent, we're seeing a little bit of moderation, as I mentioned, on average sale prices, although that has to be taken with a grain of salt, because I think we'll see changes taking place in 2025 that are going to change that. But I think where we're going to see the biggest impact on the market is during the course of 2025, the bank rate, that is the Bank of Canada's overnight lending rate, which is currently 3.25%, should make its way down to potentially 2.25%, but in all likelihood, probably around 2.5%, which in turn will improve the ability for would-be buyers to access money at cheaper rates. We don't anticipate that it's the 5-year fixed mortgage rates are going to go below 4%. And one of the reasons for that, of course, is that the bond yields are continuing to stay relatively strong. But it's still going to be better than where we are today, because today, in order to get a 5-year fixed term rate, you're looking at over 4%, closer to 4.5%. So clearly there's going to be an improvement, but it isn't going to be the kind of lending atmosphere that existed either through COVID or even just before COVID, when people were able to get 5-year mortgage rates fixed for 2%, and in some cases even less than 2%. Those days are behind us, and we're not going to see much of a change in that regard in 2025. Better, but not the historical past. So moving forward, what do we see in 2025? I think what we will see is we'll see sales increase somewhere in the neighborhood of 5 to 8%. I may be a little optimistic in that regard, but if that does happen, we will probably see ballpark sales in 2025 coming in around 75,000. And again, to put that in perspective, as I mentioned a moment ago, through the period leading up to the pandemic, that decade, we were averaging 90,000 sales. So even if we are correct in predicting that sales will go up to about 75,000, maybe a little bit higher, we're still a long way off what was happening and what was a normal course, as I said, in that decade leading up to the pandemic. Then, of course, during the pandemic, we hit over 121,000 sales, which remains the record until this day. So we're going to be improving, but it's not going to be the kind of improvement that is super robust, super exciting, the way we would like to see it, and what we were used to in the past. In terms of average sale prices, I think we're going to be even more conservative in terms of what we're forecasting. Somewhere between 3 to 5% should be the increase in the average sale price. So if we look at where we began in terms of the average sale price annually, it ended at 1,117,000. If the 3 to 5% increase actually comes to fruition, which I believe it will, we'll see the average sale price by year-end 2025 being somewhere in the neighborhood of 1,150,000 to 1,170,000. So again, positive, but not overwhelmingly positive. The real issue and why these numbers are not better than what we would like them to be is affordability. If we look at the numbers, again, the average sale prices, those average sale prices that I quoted a little while ago and that you saw on the chart, they are average sale prices which include condominium apartments. And condominium apartments throughout the GTA, their average sale price has only been a little lower than 700,000. If we were to extract condominium apartments from the average sale price, we would see in the city of Toronto, for example, that the average sale price for detached properties is in excess of 1.6 million, and the average sale price for semi-detached properties is close to $1.4 million. So those are big numbers, and those are numbers that, in fact, if you were going to try and buy the average sale price in that price point, in order to qualify for mortgage financing, you would need substantially more than about 275,000 household income in order to do so. So that's going to be the big constraint. Separate and apart from that, and this is the part that we can't forecast and that we have no control over, that is the political turmoil that we're experiencing. At the time of the presentation that we're making today, we know that there is going to be a leadership change at the federal Liberal Party level. We've seen stuff coming out of the American administration that will be in play soon, talking about tariffs, which could have inflationary impact in Canada, and particularly in southern Ontario. Those factors we can't control, and if in fact they materialize in some chaotic and economically disruptive way, these predictions may not come to pass. But separate and apart from what we don't control, we're going into 2025 more optimistically, more excited about where we were in 2024. And beyond just surviving, we're going to begin thriving in 2025. So until the next market report, please stay well, and I look forward to presenting it to you.